Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. Brian, it's great to see you as always. Welcome back to Trade Talks. And it really has been quite the week in the indexes, particularly the Nasdaq-100. We saw the volatility up its expiration last Friday, and then the Friday, July 16th, followed through on Monday, and there's been no looking back since to the upside.
Yeah, the Nasdaq 100 is it's outperforming its the other U.S. benchmarks. Very recently in the quarter, at the end of the last quarter, and on a year-to-date basis now, outside of the Russell Microcap Index, it's outperforming all of its peers. The S&P 500 is actually on par, so the S&P 500 is up 16% year-to-date. Nasdaq 100 the same thing. And remember, last year, the Nasdaq 100 outperformed the S&P 500 by 32 percentage points. And the microcap index, which is up about 21% year to date, so that's outperforming. But last year, the Nasdaq 100 outperformed by 18 percentage points versus that benchmark. So it's really just been a beast of a performer, and it's within 1 to 2% of making new all-time highs once again.
And Brian, it's just so interesting to see how quickly the market cycles are taking place. I mean, on Monday, with the averages down 2%, everyone's talking about the recovery over. We're worrying about the Delta variant, interest rates, inflation, and so forth. Now it's Thursday, and we are 1% away from all-time highs, not only in the Nasdaq 100, but the other two major averages as well. So with that said, pull up your Bloomberg. Let's take a look at the Nasdaq 100 and get some fresh levels to watch.
Absolutely here. So this is a monthly period chart. Let me switch out of that. It's very long term and zero down to the daily period chart. And we could see, this is the Monday that you're talking about. We had a gap lower, and the next day on Tuesday, we completely filled that price gap and then some. So let's see, where was that level? At about 14,667. So it was essentially, a one-day phenomenon. In saying that, we did have 2 or 3 days at the end of last week, which we traded to the downside. We noted last Thursday, the previous session was a doji candlestick, gravestone doji, which on a short-term basis, which is what daily candlesticks are, that was bearish, and we did have 3 to 4 days to the downside. But now we've quickly recovered and filled that gap in one session, and now we're within about 1% of making fresh new all-time highs. So the longer-term trend is still intact. We've always remain constructive on this index. We did have some period of volatility here in the early spring. We saw the same thing late last summer. Late last summer into the fall was when we had that rotation out of growth into value. And for 2 quarters in Q1 and Q2, value bounced back and was a strong performer. And that lasted up until the second quarter of this year. But growth has retaken that. And if we look at the ratio of value over growth, this is, we almost highlight this on a weekly basis now. And you can see this is now trading lower. In late June, the last couple of weeks in June, we highlighted this key technical support level that the ratio needed to hold for value to remain constructive. It could not hold, and is continuing today to make now new 3-month lows. When we looked at this on a long-term monthly period chart going all the way back to 2000, even back into the early 90s, we could see that the last 2 quarters in Q4 and Q1 of 2021, this rebound here where value is outperforming, it really basically touched almost to the exact level the significant low that was made in February of 2000. And then when this ratio shot up higher after that, that was the bursting of the dot-com bubble. So that actually did prove to be a resistance level on when the value began to outperform the prior 2 quarters, late 2020 and early Q1 2021, and now it's rolling back over. So this would be very interesting to see how far this ratio continues to roll over to the downside. What's going to be key is the low that was made in August of 2020. If that level breaks out, then you could certainly make a very, very easy case that the long-term trend since about 2006, 2007 of growth outperforming value is firmly in place, and that would certainly bode very well for the Nasdaq-100. One of the things that we also had been highlighting is the breadth. Throughout the marketplace, we're hearing a lot of commentary that the breadth has been very poor recently on the move to new highs. Well, that wasn't the case for the Nasdaq-100. We saw in late June, the number of stocks making new 52-week highs starting to make higher highs again. And so that was constructive, and that's something that we really like to see. And again, we're now nearing those new highs within about 1%. So we do want to see, in the last week or so, that breadth has tailed off a little bit. But when we get a breakout, or if we get a breakout to new highs, we do want to see, more stocks participating, and, we'll continue to track that. But overall, the long-term, constructive trend to the upside remains firmly intact. And going forward here, we're just now going to track, last week's high, which was at about the 15,000 level. Note that the prior high back in April was at the 14,000 level. So those round numbers certainly do seem to play in the minds of investors here. So that's what we're looking for here to see if the index can break out above this level. We've had three strong days of gains right here. So if we get to that level, I would suspect maybe we'll see some short-term volatility, some corrective price action there. But we'll just wait and see, over the longer term of the upcoming weeks and months, if it can break out from there. We are entering late summer, whereas August and September tend to be seasonally weak months. So we'll just have to wait and see, how the major indices can hold up during that time.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.